Hello, this is Patrick White from AA Commodities with your September 29th market recap here. As you can see here on the Sunday night overnight at 7:30 p.m., we've got Dees corn up 1.25 cents at 3.72 3/4. We've got Nove soybeans up 1.25 cents at 8.84 1/4, and we've got Dees Chicago wheat up 1.5 cents here. So obviously a firmer open to start the week here. I'm going to go ahead and get it started off with a disclaimer. Just remember that everything I'm talking about is just my opinion and that there's no direct trade recommendations. If you'd like to read the full disclaimer, please pause the video now. So throughout the video, I'm going to be talking about, we've got a couple things coming up this week here. We've got the quarterly stocks report coming up on Wednesday, so we're going to be talking about that and weather, and then we'll take a dive into the charts here. But I'm going to talk about the quarterly stocks here real quick first. Coming out at 11 a.m., the USDA is going to basically finalize the old crop carryouts for the 18-19 crop. And essentially what I've heard, as you can see here, here's the average estimates. What I've heard so far is that wheat, they're expecting it just to be a non-event. Corn, they're expecting it to be above the average of the trade estimates from what I've heard, kind of the whisper numbers, just because of the lack of ethanol demand and the lack of export demand here that we saw. Basically, demand really fall off here this sort of the latter part of the summer. And then soybeans, kind of the opposite of that. We had a little bit better exports than people thought. And, since soybeans have been, a lot cheaper than they have been historically, we've had a little bit of a better crush there. So a lot of the smaller countries, too, are supporting our exports. So with that being said here, going into the 6 to 10 day, 8 to 14 day forecast, looking at pretty normal temperatures to above normal temperatures for most of the Midwest. As you can see here, the moisture is still definitely, throughout the Midwest, targeting Iowa and then up into the Dakotas and up into Canada, I believe, as well. The 8 to 14 day outlook is, for hot, above normal temperatures here for most of the Midwest going into, this is for October 7th through the 13th, and still, the pesky higher than normal precip is still staying in there. So I would think, this would probably lessen the chance of a frost, but, we'll see. We'll be watching the forecast going forward here to see about that. But yeah, certainly, the weather trend is sticking with us. So going into the markets here, as you can see, we had a little bit of a firmer open here. And we're going to go ahead and start talking about the December corn chart. Really we've, had a nice push up here off these lows here from these low 350s and gone up and tested this 375 level. Man, we've really just struggled with the, getting Dees corn up above 375. We went up there and tested it, 3, 4, 5 times. We haven't really been able to sell off a whole lot. We haven't really been able to keep Dees corn below 370. There's definitely buyers down there, but certainly haven't gotten the fundamental rationale to rally it above 375 at this time. We'll see if the quarterly stocks report, which by the way isn't supposed to be a huge mover, but we'll see if that could be, give us a gift, I guess. There's not, a whole lot fundamentally that's going to get this thing, really ripping and roaring higher. I think if we do get above 375, we'll probably head up to 381. And I think that's probably going to be about it at this time, unless we see something, largely fundamental come in. But we might have to even wait for the WASDE report here in October to see that. Going into we'll talk about the wheat market, I guess, next. We've had Dees wheat, basically been rallying these last couple of days following world prices higher. We've still got the drier South American, regions, in Argentina and Brazil. So, the wheat traders have been watching that. We've had a little bit better, export demand globally, but, mostly Europe and Russia and the FSU, they've been getting most of that export demand. The Dees wheat chart looks like we're going to go back up and possibly test the 491, 492 area. That's where we found sellers before. If we break above there, we're probably headed up to the $4.95 to $5 mark. And, if we sell off, I guess we did find buyers down there at that 477, which corresponds to this old high. So, definitely, could be a pretty decent area there below that 480 mark. I was looking at that, 480 to 481 level as being a possible support level, and we just went down, dipped below it, got one closed below, and regained that. So, it's kind of a wait and see there. Dees wheat really, it's kind of being led around basically by the Minneapolis market. As you saw there in the 6 to 10 and 8 to 14 day forecast, it's still supposed to be wet for the Western Plains and Saskatchewan. So there's still a lot of wheat out in the fields there, a lot of spring wheat. That's why we've seen such an appreciation of value for Minneapolis wheat futures. I think, if we do break out of here, we've seen, first of all, we've seen sellers at 555. If we break out of here, we're probably headed up to test, the 567 to 575 region. So, basically, the weather threat is still not over for Saskatchewan and North Dakota there. And there's just reports of a lot of wheat left out in the fields. There are a lot of crop out there and sprouting in the fields, and a lot of potential dockage here as far as cash wheat goes. So something to definitely keep an eye on there. We've got Nov soybeans here. They had a little bit of a firmer open, but they're off the highs. They went down and tested the 881 level, I believe it was. Yeah, 881 and a half here on Friday, and we found buyers there at the low 880s. So I think there's a little bit of support there. If we do break that, we're probably I think there's a zone between basically 875 and 880 of support. If we can rally up here, I think we're going to test this $8.95 to $9 mark. As you can see here, we are on the broad scheme of things here. This is obviously a daily chart. The broad scheme of things, this is sort of an interim downtrend, and we've had a nice push up here from this 855 mark. If we do rally above here and regain this $9 area and get a nice solid close, we're probably headed up to test the 920 and then 940 level. But definitely need a fundamental catalyst for that to happen. Obviously, we've had the Chinese purchases coming in here. They're starting to add up, but thus far traders are not excited, as you can see by the price action here. Not a whole lot of excitement. And we'll see what they want to do here on down the line. But it is Golden Week in China, and that's a holiday week. So I believe it's Tuesday on. There's not going to be anybody in the offices. They're most likely purchasing soybeans. So we'll see how the market reacts to that here this week. We'll see. Basically, this thing's been supported by the export sales, basically leading it by the nose. And if those go away, we're going to need something to keep soybeans supported. So going into kind of a related market here, we'll see. Yeah, the cotton market, really kind of an interesting market here. Went up, obviously, and tested above here and got up to like the 62.5 mark. And we've basically just been marking time since then. Traders have been basically filling in the rally. Where we broke out from the $60 mark is where we've tested about 4 times here, and we got a nice solid close higher on Friday there. So I think that's kind of the mark where the buyers are. If you're long in the cotton market here, you do not want to see a solid close below this 59.90 level. Otherwise, we're probably going to continue this channel between 58 and 60. But thus far here, buyers have stepped up, and gotten this thing to stay bid and stay supported above 60. So that's good to see. And if we are going to test higher, I would expect us to go back and test this old high up here at 62.75, and if we break above there, up to 64.75. So definitely something to take a look at as far as a bullish scenario for the cotton market. Going in here to cattle, here we've seen a nice run up here just on lower supplies and lower weights. So really just put on a lot, on a lot here on Friday. We were up $1.82 on Friday, and we went up to this 110.50 resistance level. That's where I kind of got resistance pegged here, and it corresponds with that low there from August 7th. And if we can get above here, I think we're headed up to this 113 region. That's where we saw a little bit of sellers in there, this last June. So something to keep an eye on there. I think, if they do profit taking here, we should probably want to hold, this 108 to 107 region. If they don't hold that, we're probably headed lower. But yeah, with that being said, this is, cattle are definitely in an uptrend. We'll see how far they can run here. Nice to see those, after the pretty sharp fall here in cattle this last fall. So in this last chart here is Dees hogs. Largely we're in a downtrend, although we have found support in here at this $60 mark, and that's basically kind of like soybeans. Just exports are leading it by the nose. We got the news last week that the Chinese are planning on 100,000 tons of pork purchases. Hopefully, or recently we haven't seen those come up, so hopefully we can see that in an export sales report this week. But we haven't seen those sales, but I think they are likely. But with that being said, though, the market really, we pushed up here, and what else is there? We rallied in expectation of the export sales, and what else is there really to push us higher? So we're definitely in need of another fundamental catalyst to get us above here. If we do get above here, we would break out of this downtrending line. So that would be pretty significant, I would think. We'd probably rally up to this 74 mark and then see where we go from there. That's kind of the target I've got, for Dees hogs, is that $74 area. I think if we sell off, we'll probably be contained in here by right around price 66 to 66.50. If we lose that, we're probably going to be back inside this range between $66 and $60. So those are my levels here for the week. If you guys have any questions, feel free to give me a call at 712-262-7606, or you can visit us on our website, aa-commodities.com. So thanks for watching and have a great week.